the big key that everybody should take away is that they should get with their bookkeeper monthly to see what their figures are looking like, and then get with their CPA or enrolled agent at least quarterly.
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
No one wants to deal with the IRS or state tax agencies when they have a tax debt. If you are in a bind and need guidance, this episode is for you. You can learn valuable strategies for managing tax debt, understanding when to seek professional help, and how to handle IRS or state audits effectively. So, Morgan, welcome to the show.
Thank you so much for having me, Candy. My goal is to take away the mystery and the anxiety caused by the IRS and state tax agencies. So I really appreciate you having me on your show so we can talk about this and kind of demystify all of it.
Well, I know people will be excited to hear what we're talking about to figure out how to get themselves out of debt if that's the situation they're in. But before I ask questions on the topic, I'd love for you just to tell me a little bit about yourself and how you began to help the small business owners with their tax debts.
Great. I have been focused solely on tax debt resolution for almost 26 years. Hard to believe because I only look 35. No, I'm kidding. But, I stumbled into this corner of the tax world completely by happenstance and fell in love with being able to help people who are in this oppressive situation. They're getting notices from the IRS, notices from the state, and it causes such a panic and causes such anxiety. They don't know what to do. So they say, okay, I'm going to get into a better financial situation and then I'm going to deal with it. And before you know it, it's a year or two down the line, penalties and interest have accrued, more tax debt has accrued, and they just get kind of put into a corner. They're getting threatening notices from the IRS and the state. And I fell in love with being able to have a positive impact for these people on their personal lives, being able to get sleep at night again, helping navigate a solution to it all. And it became something that I threw myself into 110% and have been doing it since I started in September of 99. So I have helped thousands of businesses and individuals get to a solution with a tax debt. And I still get Christmas cards from people who I helped 10 years ago because they're like, gosh, without you, I wouldn't have even known how to get to a solution. So my clients have inspired me. I opened my own firm in August of 22, and we have just exploded with people nationwide knowing that we are a viable, ethical answer to help them get to a solution. So long answer to a quick question, but my passion is helping people in this unique type of financial situation.
Mm-hmm. Well, and there's so many different things that could arise. A lot of times people just think income tax, but there are so many different taxes as well, too. And it's hard to keep track of all the things, if it's payroll tax or sales tax or income tax. So I'd love for you maybe just to talk on the common tax issues that you have seen, and how do they proactively address those situations so that they can avoid these consequences of getting those notices?
Ooh, okay. So let me flip the question a little bit. So the best way to prevent a problem is with strategic tax planning. So I always encourage people to think of their bookkeepers and their CPA or their enrolled agent, whomever they align with to do their annual taxes. Think of them as members of your board. Right? Your client should be coming to you and saying, okay, on a monthly basis, here's all the, I don't know how to classify them, or I'm thinking about making a change with my business, or I'm thinking about buying some equipment. Candy, what do you think? Right? CPA, what do you think? You as an expert bookkeeper and payroll specialist and the CPA or enrolled agent that they work with for the annual tax handling, you have so much experience. And if your clients just let you have input, they have these allies on their bench who can help them navigate around problems that usually lead to a tax consequence. So it's all about leveraging your resources and your allies to help you before a problem starts. Right.
Right.
A lot of people that come to me, they started their business with a vision and were underfunded. Or they start growing so quickly, they don't keep track of the profits that are flowing through to them. And then before you know it, they're filing a tax return under extension with a balance due. And oh, by the way, then at that point, we're 3/4 of the way through the next year. They're behind there. A lot of times it's just from a lack of planning. So great question. But yeah, that's mostly what I see on all fronts.
Well, I think part of the situation that happens too is if people are looking at their financial reports and they're just looking at that bottom line number for profit, that might not actually be the true profit that they have to pay taxes on, correct? So I don't know if you want to touch on
Yeah.
that at all, because sometimes people have things on there that really aren't deductible and then their profit changes. Do you want to touch on that and
Oh,
help them understand that?
you know, honestly, so my area of expertise is more on the back end. So a lot of the pre-planning aspect isn't truly my area of expertise. It would probably be more in line with yours, with, what will end up flowing through to them as the sole proprietor or the single member LLC member or a shareholder from an S corp. Um, but I think the big key that everybody should take away is that they should get with their bookkeeper monthly to see what their figures are looking like, and then get with their CPA or enrolled agent at least quarterly or before making big decisions, because these are the people who, when you put all of their expertise and knowledge together, are going to be able to say, hey, you are positioned higher than you were last year. We're looking at a different income tax bracket, or whatever the case may be. Let's start planning ahead. If you have an S corp and you can give yourself payroll, let's increase your withholdings to offset what's ending up coming through to you. It's all in the planning. It really is.
So I'd love to go back to where you just said too, where somebody, is on an extension, they didn't actually pay any tax that they owed in April or March, depending on what their deadline, technically was supposed to have been. And now,
Right.
towards the end of the year when they file, they realize now they have a tax balance. And now, they're already, like you said, kind of into this year where maybe they don't have enough tax saved for that too. And so now it's just kind of building, and they're looking at it like, how am I going to get out of this? And they get an IRS notice that says, you have tax due from a prior year too, not even one maybe that they just filed, And so what do they do when they first get that notice in the first place to make sure that they are preventing continual, interest and penalties and all those things if they're ignoring them?
It's a slippery slope, as you're alluding to. It really is. So let's take this current situation where we are right now. Let's say somebody is in the second year of their business. They filed 2023, well, 2023 was the first year. 2024 is their second year. 2025 is their third year. Okay. 2023, they had a profit and it created a tax balance of $8,000 just for grins. Okay. So they're paying that with monthly payments.
Mhm.
Right? They called the IRS, said mea culpa. Oh my gosh, new business. I'm so sorry. They're making monthly payments on that balance. And then for 2024, they talk to their CPA or EA and say, you know what, my books are kind of a mess. I'm going to need more time. File an extension for me, please, for my tax return that was due in April of 2025. And they say, okay, yeah, great idea. And then they start moving around with their bookkeeping and they get all the records to their CPA or EA in September. Okay.
Mhm.
Filing deadline for the extension is October 15th, but it's an extension to file, not to pay. So the EA or CPA pulls together the tax return and it says, congratulations, you've made more money in 2024 than you did in 2023. Your business is growing. It's a wonderful thing. However, you now owe $20,000 in unpaid income tax. And then you sit down with the CPA or the EA and they're going through this with you and they say, okay, by the way, your numbers have increased in 2025 over 2024.
Mhm.
So as an individual who's self-employed, you are required at minimum to make 4 estimated tax payments throughout the year. It's because you're self-employed, nobody's taking taxes out of your pay, right?
Hmm.
Well, now, as you're preparing for that October 15th extended filing deadline, you're past the third deposit for 2025.
Mhm.
And you're knowing it is going to be higher than 2024. 2024's tax was 20,000. So it does create this snowball. And this is why I'm not a huge fan of filing extensions.
Hmm.
I'm just not. And I know that a lot of people love that extra time. And there are certainly times when, like, let's say you're a shareholder of an S Corp. S Corps almost always file extensions to file in the fall of the following year, right? And you can't file your tax return because you don't have the K1 from that entity yet. So you don't have all the data to file your return. But this goes back again to why I say it is so important to have an ongoing relationship with your bookkeeper and with your tax return preparer throughout the year so
Mhm.
that they can prep you and they can analyze your books and say, okay, you know what? It is April of 2025. I'm looking at your 2024 books and I'm looking at your 2025 books. You made more money in 24 than you did in 23, which was great. But now you're pacing even higher in 2025. So as we prepare for your April 15th, 2025 estimated tax payment due date for your income being earned in 2025, let's figure out an appropriate amount for you to deposit so you can get on track. So many times it happens so quickly for people.
Mhm.
And business owners, as you know, as I know, you are everything to your entity, right? You are your administrative record person. You are the one who handles the annual insurance requirements. You're the one who
Mhm.
handles the social media outreach so you can get more customers. You're the one who's doing the sales. You're the one who's doing the work. I mean, we really are Jacks and Jills of all trades within our entity. And it's
Mhm.
so easy to say, you know what, the financial records, as long as I have money in the bank and I can cover my bills, I'll deal with it later. It's so easy to do that and to fall into that trap. But we just can't have that happen if you want to prevent problems like this.
Mhm. I would love to get your opinion too on from this scenario you just said. There's 8,000 that they owed and they're on monthly payments now. Then they had
Mhm.
20,000 from 2024 and now 2025 they should have made an estimated tax payment by April 15th, which has passed already. And
Right.
then June is going to be quickly approaching, and they're
Mhm.
looking at, how do I figure out what to pay? Do I still just pay on the old and not pay the estimated tax payments, or should I pay, the estimated tax payments and then try to figure out how to catch up on the old stuff? Like, what do you recommend to the person who's in that scenario? They don't have enough to pay everything off right now and they want to get on track.
Great question. Always the priority should be to stop the bleeding, which means pay your current tax obligation first.
Mhm.
Getting in control of that, then seeing what you have left over, lets you negotiate some type of resolution plan with the IRS or states while preventing any ongoing accrual of additional taxes.
Mhm. Well, and from my perspective, and I don't do all of what you do, like fixing the problems, but when I'm educating people on what they should be doing, I say too, if you pay late, you're going to have at least a 10% penalty, generally speaking. And so it's better to just pay the current one and not have the penalties and interest. And like you said, figure out how you can kind of catch up on the old. I don't do the actual coaching that you do, but if someone asks me my opinion, I always say, avoid that extra penalty if you can, right?
Mhm.
So,
Absolutely.
well, and if someone then is coming to you and saying, I'm in this bind, I'm, 30,000 behind and I can't even see how I'm going to pay this off. I don't even know what options exist. Can you talk about the different options that are available for them to resolve this tax debt, and which is the best option for them to, figure out which direction they should go?
Great questions. So, again, first and foremost, you have to stop the bleeding. If you don't, that installment agreement we had in our hypothetical situation for the 2023 balance, as soon as you file 2024 with a balance owed, it defaults that agreement, right? So that's the first thing to know. If you're going to accrue more tax, you're going to be defaulting the agreement. Focus on how to get in front of the current tax obligations, and then if your debt is below $25,000 on income tax or $10,000 with payroll tax or sales tax, you can handle it yourself. You just need to figure out monthly payment amounts and call the agency and say, look, my priority has to be preventing ongoing accrual. I'm focusing on staying compliant with my current tax obligations. I want to figure out a solution to the old stuff. Let's talk about it. They will set up monthly payments to address it. If you have no means to pay it while you're staying attentive to the current obligations, you can ask them to put you into a currently not collectible status. And what that means is the tax agency understands, for whatever circumstances are, you cannot afford to tend to the current obligations and address the old debt right now. That's always a temporary status, and every state has their own time frame for it. Some states won't allow it, but most states do. And it can typically be from 6 months to 24 months, where they say, okay, stay in control of your ongoing obligations. We're going to give you some breathing room on this old debt, but we're going to come back to you in 6 months, 12 months, 24 months, and ask you for an update on your financial condition. If you stop tending to your current obligations, everything's out the window and we're going to come after you again. The other circumstance that you can do is set up monthly payments, right? Like, okay, if I tend to my current obligations and I owe $28,000 right now, I can pay $500 a month towards it, and they'll set up plans. Usually every state again is different, but the IRS can give you up to 72 months without even going through a big financial statement
Mhm.
um, to repay the debt, which is great. There are options for compromising the debt. And if your debt is higher than 25,000 for income tax or 10,000 for payroll tax, I would encourage you not to try to DIY it. And the reason is because that's when they're more aggressive. That's when tax lien starts getting filed. That's when they try garnishing pay or issuing levies to your income sources if you're a business. It gets pretty aggressive. Payroll tax, anything above 10,000, they're also looking at piercing corporate veils and holding people personally accountable for a portion of the debt owed. It just gets a lot more aggressive, and there's so many more moving parts to it. So going above those thresholds, I would recommend not DIYing. But there are options. There's installment agreements. There's currently not collectible. There's offer and compromise or settlements. A lot of people see those wonderful commercials. You know, the people who say, I owed $200,000 and I hired this firm and they settled for $5,000. You know, of course, you're getting the biggest and best negotiations they've ever been able to do. And they don't say you got to qualify, and, you know, it's pretty hard to qualify for them. But there is that solution. There are solutions of liquidating assets, getting tax liens removed off of assets to pay the debt. There's ways of getting the IRS or states to subordinate their lien position. If you can get a loan to not full pay the debt, but maybe take a chunk out of it. A lot of lenders say, ooh, you owe the IRS or the state. Yes, but if we can get them to move their lien position behind the new lender, a lot of people don't know that that's an option. So there's for installment agreements, there's so many different programs of how those look and what the requirements are and terms for repayment. You know, my recommendation would be, if you have a debt over the 25,000 of income tax or 10,000 for payroll or sales tax, get an expert involved.
So if someone owed, let's say they just didn't know any of the things they were supposed to do, and they didn't pay their payroll taxes, and now they also have income taxes, you know, do you have a recommendation of which one to pay first?
Ooh, you know, the IRS, it depends, first of all, on the type of entity. Okay. Because if you're a single member LLC, the business is a closer connection to you as an individual versus if it's an S Corp, right? S Corp creates a little bit more division between the individual and the business. But I think first things first, they want to make sure that you don't accrue ongoing payroll taxes, because those are, when you look at the root of what payroll tax is, it is money taken out of employees' paychecks, held in trust by the business to then turn over to the IRS and state. That is why the IRS and states are so aggressive about payroll tax. It's not your money. It's not the business's money. It's money taken out of employees' paychecks. For that reason, my recommendation is to focus on fixing that first. And if you're working with the IRS or state, you can explain to them, hey, I've got these two problems. I feel like addressing the business payroll taxes is the first thing I should do. Can you put a hold on my personal account, knowing that I'm focusing on the business account first and these trust taxes that have to be addressed as the priority? And they will. They will. A lot of it is just communication. Communication is key when dealing with the IRS and state.
Well, and earlier you mentioned some terms that people may not know what the definition is. So you had a lien, a levy, and a garnishment. So can you say what those are to help them understand specifically?
Sure, you bet. So a lien is an official court document, a recorded device that says it's filed by the IRS or the state, and it is formal notification that a debt is owed. So while it is it's like a security instrument, okay? Kind of like when you purchase a home and you have a mortgage, your mortgage company, when you sign on the dotted line, they file a lien against the property. So you can't sell it without addressing the mortgage
Mhm.
before you get the balance of the proceeds. Same thing with a tax lien from the IRS or the state. It's a formal recorded document that says you officially owe us this much money and we have a right to collect it. A levy is an action on that lien. So we have perfected a right to be paid back this money. We've sent you notices. You have not responded. For that reason, we are going to issue a levy to an asset, and it's usually to banks. Bank accounts
Mhm.
always tend to get the first levy order. If it's a significant debt and you aren't responding after that bank account levy is issued and handled, they'll up the ante. They'll look at assets such as 401ks, IRAs, things like that. They'll issue the levy notice to these places. And typically, what happens at the IRS level, and most states follow suit, when a levy is issued to your bank account, your bank doesn't just take the money and send it right away to the IRS or to the state. There's usually a holding period, and the holding period is given to allow you time to try to work out the situation. With the IRS, it's 21 days. Your bank gets the notice on, let's say, May 1st. They will hold the money. They'll take it out of your account, but they hold it for the IRS for 21 days. 22nd day, they send it in to the IRS. But we have a lot of circumstances where the levy is used as an attention getting action, right? You haven't responded to notices. We haven't heard from you. So we're going to issue a levy to the known bank accounts in your name, hoping that that gets you to react,
Mhm.
hoping that that gets you to call us and say, oh my gosh, you took money out of my bank account. What is going on? And then they say, okay, now we have your attention.
Mhm.
A garnishment is an order to, let's say you're a W-2 employee and you're working for ABC Corporation. You've worked with them for a while. You have an old tax debt and you hadn't heard from the IRS in a while. They're not being super aggressive with it. You've gotten some notices, but you kind of just throw them in the trash can. And all of a sudden, your HR department at ABC Inc. pulls you down and says, hey, we got a garnishment order from the IRS for you. We have to take 10% of your paycheck and send it to them. That's what a garnishment is. So lien is perfecting the debt that's owed. Levy is an action where they take money from a source on a one-time action. And a garnishment is where it's an ongoing action to collect monies.
And based on what you were saying too, hopefully what people heard is they levy when you do not respond, right?
Yes. Yes.
So,
Communication is
yes,
key.
like don't just ignore those notices, right?
Right.
They're not going to go away.
Right.
So, definitely,
Right.
take care of that situation. So, I guess, is there any advice that you can give on anything else? Maybe I didn't think to ask you on this topic, but you wanted to share in relation to, the tax debt, the offer and compromise, or, any of these monthly payments that they could set up, any final tips, I guess you want to share.
Oh my gosh, each of those areas have 1,000 talking points that we could get into. Um, I think one takeaway I would love everybody who's listening to this conversation, I would love you all to take away is that if you get a notice from the IRS or state, don't think of them as the boogeyman, right? A lot of time people have this mental image of, oh my gosh, the IRS is going to show up on my front door. It's going to be somebody in an overcoat with a gun and a badge and a fedora saying, I'm taking your firstborn, right? Like there is this inherent fear that we have all been conditioned to have when thinking about the tax agencies. Throw that right out the window. That's not how it is. Yes, they have a debt to collect. Yes, it's something that you need to address, but don't let it rob you of your peace. Know that it's something that if you don't address it, it can escalate. The aggression will eventually escalate. But if you just call them up and say, hey, you know what? I got this notice. Sorry, can you help me understand what it's for? If you don't understand it, can you help me set up monthly payments to address it if that's what you want to do? Or I can't afford to pay it right now. Let's talk about options. If it's over those thresholds I mentioned before, get somebody involved where this is all they do, because a lot of CPAs, a lot of EAs do tax advising, tax preparation, payroll processing. They probably have bookkeeping in their offices, but their specialty is in the front part of the tax world, not the tax debt side.
Mhm.
A lot of them will dip their foot in the pool, so to speak, with representation, but you really want somebody involved where this is their day.
Mhm.
Day in, day out, 24/7. This is what they do, and this is all they do, because they're going to know the shortest way to get to a solution. They're going to know when to push the IRS or state and when not to. They're going to know how to advocate for you in the best manner possible.
Mhm.
So if you do need somebody involved, get somebody, call me, get somebody who says this is all they do all day long.
Mhm. And while you were talking, I was also thinking, don't fall prey to someone calling and saying you owe this debt, send me this money or whatever. You know, they're going to talk to you in
Oh,
written documentation, right?
right, right. It's funny. The IRS, I've been doing this for so long. I've seen so many different incarnations of how the IRS collects on debts. And it used to be they'd have people show up unannounced at your front door knocking and saying, I'm revenue officer such and such. Here's my card. You owe us a lot of money.
Mhm.
Now, because of the threat to the federal employees, and that situation tended to put fuel on the fire, and it created even more explosive dynamic between the taxpayer and the federal government, that they decided to stop doing that. So they will, before they show up in person or they start making really aggressive movements, they're going to give you plenty of warning notices in the mail.
Mhm.
And usually, if it's an appointment, they will send it via certified mail to make sure that you receive it and you sign for it.
Mhm. Yep. Just don't fall prey for people who are trying to steal your money, right? That's-
No, they will not email you.
Mhm.
That is a huge,
Or text.
huge one right now. Or text you. Yeah, they do not do that. I've seen even some tax resolution companies that will send notices that almost look like it's coming from the government.
Mm.
You've got a tax lien filed. You better call us or we're going to come after you. And you call them, and it's actually not the federal government. It's some resolution company.
Mhm.
It's pretty scary how
Yeah.
far people go to scam innocent taxpayers when they're in a vulnerable position to begin with. It's
Mhm.
pretty scary, the tactics that we see out here.
Yes, it's very sad.
It
Well,
is. It really is.
I know we're coming to the end of the time we have together today too, so I know there's so much more we could talk about on this topic, but we
So
are running
much.
out of time. So I wanted to ask, do you have an offer that you would like to extend to our listeners? And if they want to touch base with you, how can they contact you?
Yeah, so the biggest offer that I can give anybody who's listening is, if you have a tax situation, call us and talk to us about it. We always do a free consultation for anybody who says, I've got this tax situation. I don't know what to do. We have, like I said, almost 26 years experience of just dealing with this. 9 times out of 10, I tell people you don't need to hire an expert, and I'll tell you why. But people are looking for just even that bit of guidance, and we are happy to give that to you. When we engage with people when they're calling us, we know that they're scared. We know that it's a situation that they just don't know what to do with. I had somebody call me today, and she was calling for her son, and he owes $3,000 to the IRS. And to a 22-year-old kid, that's a lot of money.
Mm-hmm.
And she said, "We don't know what to do. Do we need to hire a tax attorney?" And I said, "No, let me take out a pen and a piece of paper. I'm going to tell you exactly how to handle it."
Mm-hmm.
And we are happy to be that resource for anybody and everybody, because we don't want anybody to be taken advantage of.
Mm-hmm.
So
I agree.
yeah, that's our big offer to anybody and everybody. We're going to give you a full assessment of your situation and what you should do about it.
Mm-hmm. So do they go to a website? Do they call you? Like, what's the best way?
Yeah, you can go to our website. It's Golden Lion Tax Solutions. Just think of a big, strong, regal lion who's going to step in front of you and face the IRS down. That's our website, and my contact information is on there. Social media, we're all over social media: Instagram, Facebook, LinkedIn. Just look me up, Morgan Q. Anderson, and you're going to find a way to get in touch with us.
Perfect. Well, thank you, Morgan, for being a guest on my show and talking on this topic. I know it could be overwhelming for people when they get those notices, and it could put terror
Oh,
in their
yeah.
hearts, right? But just to know there are
Absolutely.
options out there to help, resolve that. So I appreciate your taking the time to chat about that today.
You bet. Thank you so much for having me. I hope that everybody was able to walk away from listening to our conversation with some tidbits that takes down that anxiety level, because it's a situation that has to be handled, but you don't need to give it more power than it really deserves.
Exactly. Well, and to the listener, if you enjoyed today's topic and you want to hear additional information, you can find access to exclusive content in the show notes. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, a link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.